So for expats who are either living overseas, or maybe it's potential expats who are in America but thinking about moving overseas, and they're thinking about retirement, they're planning for retirement, what are some ways that they could approach that, and what are some of the benefits of being an expat during retirement?
Well, for expats, a lot of the retirement planning is the same, but with two additional considerations. Number one is a lot of times they live in a foreign country that uses a different currency. So you should be prepared for any changes in the exchange rate. In addition to that, there are some other tax implications. So a lot of times, just because you get certain tax benefits in a local country doesn't mean you're going to get them for US tax purposes. So you might not get certain deductions, or certain things that are not taxable in your home country might be taxable on your US tax return. And in addition, there might be a host of other forms that you have to file because you have a foreign retirement plan, such as reporting as potentially as a foreign trust on forms 3520 and 3520A. Some of these investments might be considered PFICs, or passive foreign investment companies. That comes with a whole host of additional taxes that you have to pay and other forms you have to file. That's the IRS Form 8621. You may also need to report these on an FBAR, or a foreign bank account report, or on a FATCA report, which is IRS Report 8938. So in general, a lot of the planning is the same, but you have to take into account potential exchange rate fluctuations. You have to take into account that just because a retirement or pension plan is treated one way in the country that you're living in doesn't mean it's going to be taxed the same in the US. There might be a host of additional forms that you need to include on your tax returns in order to avoid some pretty horrendous penalties that can easily start at $10,000 per year and can quickly escalate from there.